This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 219 is brought to us by Bybit. You probably get tired of me saying it, and I don't care, but man, you would have had to be pronounced dead not to make money in the crypto market this week as a trader. For investors, it might not have been that great, but for traders, it's almost always great. And what's even greater than that is joining up with one of the most liquid, safe exchanges on the planet that also gives you rewards back just for being a part of their platform. How do I do that? Well, you have to click my affiliate link first. Go down to the Bybit blog in the show notes. Click it, read it, see if it's for you. If it is, my link is down below at the bottom. Click that and get yourself signed up. Markets move like this all the time, and I want you guys to get a piece of it. And while you're doing that, you may as well reap the benefits too, because with Bybit, membership has its rewards. It is the 10-Minute Contrarian Podcast, and today's episode is a culmination of a lot of the episodes we have been doing in the past maybe 2 or 3 months. You know, they all kind of lead here. And then what I'm going to do is I'm not going to really go into the assets I hold too much this episode. I'll go deeper into them later. But what you're getting this episode is more like a percentage allocation of where I currently have everything, and more importantly, why. So let's go ahead and get into the why now. And if it's not obvious, is we have a major problem in my country, probably your country, really the entire world, when it comes to fiat currency. I alluded to this briefly last week. It's one of those things like, was it Usual Suspects? The greatest trick the devil ever pulled was convincing the world he didn't exist. Now, when it comes to the value of your fiat currency, let me just speak for the dollar because that's the one I can really speak for. The value has gone nowhere but down, and down sharply since 1900. You know, pick a year, really. The only exception in the United States where you actually saw a bump up for a short while was the Great Depression. And if you recall, during the Great Depression, the value of assets obviously fell, so that's going to make the dollar go up. And the only safe haven you had back then was gold. And in 1933, they attempted to confiscate most people's gold. You know, so it took the worst depression of our time and gold confiscation just to see a small bump up in the value of the United States dollar. But it has been nothing but a melting ice cube before and after this one very unique period of time. Yet, what does almost everybody do nowadays? They hold nothing but cash because they don't know any better. And I said this last episode, that probably includes the majority of you. You have been psyoped your entire life into thinking that financially, the number in your bank account, denominated in fiat currency, is the most important thing. Not knowing and not realizing and not understanding just how much that money gets eaten over time. And the worst part, you don't notice it in your bank account. So for example, the episode I did called Good Night and Good Luck. If my numbers were correct, if you have, let's say, $1,000 sitting in your bank account, and you've had that $1,000 sitting there since 2020, the value of that $1,000 has become today right about like the $350 range, maybe $370. But on your bank statement, it still says $1,000. That's the whole grift. That's why nobody can afford anything anymore. I tell people this all the time, and only a small percentage of them actually understand it when I say it to them. And I explain things to people for a living. They still don't get it. It's not the prices getting higher. It's your dollar getting worse. Everybody looks at the wrong side of the equation. But it's always been this way. But of course, it's not in anybody's best interest in the government to let you know about this. I've said it before. The lengths we have gone to in the United States, the amount of people we have murdered just to keep dollar hegemony. and to keep people from leaving the dollar has been extraordinary. You could write books on it. Books have been written on this. And we're talking about the world's reserve currency here. I'm sure most other currencies have fared far worse. If you want to see a chart, and if you're a visual learner like I am, I will include a link down below that includes an inflation calculator and a chart of the value of the US dollar from 1900 up until now. And it's sad and it's appalling just how many people sit there and hold these melting ice cubes because that's what they were told to do. Throughout history, the only people who were really aware of this phenomenon and who were screaming as loud as they could, but they were all seen as a bunch of crackpots, were the gold bugs. Gold bugs were how I first learned about money. The Mike Maloney books really red-pilled me and got me thinking, oh shit, I may not have a lot of money. I certainly didn't back then when I was reading his books. But the money I do have, I don't want it to melt away. So, I should probably do something about this. And this is when my entire investing life changed. Or I should say my entire investing life began. Now, of course, I was an idiot and gold was too slow and reasonable for me. So I started out with penny stocks. But, that's what you do when you're young and broke. I would have been much better served just preserving the money I did have. But for most of us, it was a boiling frog scenario to where inflation was just slow enough to where even though compound interest was working against us, which I've said is the worst thing that could ever happen to you. Compound interest in your favor is the best thing that can ever happen to you, but working against you is the absolute opposite. Everything this past decade was really, really accelerated. I remember during COVID, I was like, okay, this has got to be a bear market. This is an absolute catalyst for a recession that is long overdue. And remember, this was long overdue 5 years ago. But what did the Federal Reserve do? They fired these things, they were calling them bazookas at the time. Full $1 trillion, $2 trillion tranches into the economy just to prevent it from crashing. And everybody in financial media was like, oh, yay, we're going to save the economy from crashing. I'm over here like, what are you doing? What the fuck? Why? Let it crash. You have a perfectly good scapegoat. Nobody can blame anybody for this. And they'll be totally fine letting it crash, letting things reset, filter out a lot of the crap, and then start anew. This is perfect. But they just wouldn't allow it. And they printed and created and squandered, I think, $7 trillion when it was all said and done. And I'm over here like, we're going to pay for this. Like, you can't just do that with no consequence. And, I was right. Not because I'm a genius, because it was fucking obvious. You print that much money for no good reason, it's going to come back and bite you. And that is where that anywhere from 25 to 65% hit we have all taken with our fiat currency this decade happened. It used to not happen that quick, but it has this decade, and it looks like there's no end in sight. Most of the smarter people I follow will all say the same thing. With what is going on right now and with what has gone on, all roads lead to inflation, and all roads lead to more printing. And as I say, all roads lead to chain link, but we'll put that aside. But the good news, at least if there is any, is that we can do something about it because the world has also changed. One in particular, and I've said this before, is the rise of social media. Social media was the worst thing ever to happen to the elites because now we can all talk to each other. And this is why the liberals, for about 6 to 8 years, tried to monopolize and completely compromise our social media. And I will never, ever forgive them for that. Absolute power corrupts absolutely. And the United States Federal Reserve, although it was necessary at the time when it was created, stopped becoming necessary soon after that, yet held on to their power. And now over 100 years later, absolute power has corrupted absolutely. But they were able to get away with it for a very long time. It's like, back in the 1300s, 1400s with the church. Absolute power had corrupted absolutely for centuries because nobody could read. I think like a book was as much as a house back then. But then this changed. A lot more people were able to read. And this is one of the main things which caused the Reformation. Now, this is not being anti-religious or anti-Christianity. I am religious. This has nothing to do with the religion itself. This is the church. These are people, human beings, being human beings. And when you give them absolute power for any amount of time, things go downhill fast. But thanks to social media, hopefully we have been able to identify the main culprit here, which is the Federal Reserve. And more people are actually doing something about it because of reason number 2, and that has been the Bitcoin community, bringing this to the masses. Like I said before, for a while it was just a bunch of kooky old men screaming at the sky. I mean, they were right about what they were screaming about, but not a lot of people were listening to them. The Bitcoin community, which has the same principles as the gold community, even though they fight, oddly enough, were able to bring this to the masses in a way that was much easier to understand. And because of the fractionality of being able to buy Bitcoin, the entire world had access to this now. Yet, oddly enough, this didn't take as well as it should have, or that this methodology didn't take as well as it should have, because as soon as through blockchain we were able to bring dollars to the world, digital melting ice cubes to the world, this is what most people have chosen so far. Instead of choosing the thing that went up in value, they chose the ice cube that was melting the least. And remember, I said this last week too, the reason why most people still do this is because they don't understand the value of their cash goes up and down, mostly down. Because you can't visualize this in a bank account. It's going down. You just can't see it. You feel it later. But unlike going and looking at the price of gold or the price of Bitcoin or the price of Nvidia, we can see those things going up and down. But we can't see it with our cash because there was never a chart built for this for obvious reasons. So almost all of the entire world still is completely hoodwinked by this idea, which leads me into the solutions part of this episode, at least where I stand. All right. And I want everybody to kind of look at it like this because I have no idea when it comes to my audience how much money you have on you. I know because of correspondence, I have people who are multimillionaires listening to this podcast. I have at least one hedge fund manager that I know of who listens to this podcast. And then I have people who barely have 2 nickels to rub together. Look, it doesn't matter. I need you to start looking at things differently. And when I say differently, I mean correctly. Hopefully, I was able to point out to you in the first 10 minutes of this show just how incorrectly we have been looking at things our entire lives and how incorrectly most people still look at things and will probably continue to do so until it's too late. I've been talking about the great wealth transfer ever since this show was in existence and how everybody, no matter how much money you have right now, can end up on the right side of that and move up, have upward mobility financially, because that's what really matters. It's not how much actual money you have. I mean, this does matter, of course. But what you really want to end up doing during this period of time, and especially during the last half of this decade, is to move up percentage-wise. You want to move into a higher percentile when it comes to actually how much money you have. Not fiat currency, but just overall money. Because if hard times come, almost everybody's portfolios are going to go down. And in good times, the value of everybody's cash goes down. So if you can just simply avoid these two things when they happen, you will be able to have this upward mobility and increase where you sit in this overall percentile. Now remember, with percentile, you want a lower number. So if you're in the top 50 percentile, and if you're a Westerner, I'm telling you right now, you are, no matter how poor you think you are. You want to be able to move up and get that number even lower. Move up to the top 10 percentile, and then the top 5, 2, 1. But the main thing is that you move up, and I'm telling you right now, simply by making sure the money you do have doesn't melt away, like almost literally everybody else is doing right now, you'll move up. And that's the game, contrarians. That's always been the game. I've told that joke before about the two guys walking around in the woods, and a tiger approaches them, and the one starts tying his shoes. And the other guy's like, what are you tying your shoes for? You can't outrun a tiger. That's silly. And he's like, no, you don't get it. I don't need to outrun the tiger. I just need to outrun you. And this is the way you need to look at things. Stop looking at overall amounts denominated in fiat currency. Just move up percentile-wise. Good things will happen to you. Opportunities you never thought possible will open up. I'm saying this mainly to the people who don't think they have a whole lot of money. Let's say you have $500 saved up. Fine. Be smart with that $500 and make sure that even though it's going to still say $500 on your bank statement, that $500 doesn't end up being like $220 or $230 in terms of what you can actually buy with it in the next 5 years. Because that's what it did the past 5 years, most likely. Remember that episode, Contrarian's best case scenario, if the government numbers, the fucked with government numbers were actually true, that 500 became more like 400, which is still really bad, but more like 220, 230. Now, how am I positioning myself for this? Well, the first thing I want everybody to do is remember last episode. If you have one thing that is taking up an absurd amount of your portfolio percentage-wise, or is not an investable asset, so like your home, your car, your business, or let's say you were super early to, something like Hyperliquid, and all of a sudden it went up like crazy, and now it's 80% of your portfolio. Take all of that and put it aside. It does not count here. It's great that you have it, but it does not apply here. Now, as far as the rest goes, I am shooting for a 25% allocation across the board in these four things. Now, I'm never going to get exactly 25% because the value of things go up and down every day. So I'm not going to overly stress it. This is just a range I'm shooting for. And if one of these things starts getting too high or too low, then I'm going to do what I can to correct it over time. Now, again, I'm not going to spend too much time talking about these because there will be future episodes that will drill down into them more. And you already know what I think about most of what I'm going to say to you today. But the very first 25% allocation obviously is going to be gold. Gold is the ultimate defense. It's about as perfect as it gets in terms of defense. And it's far from perfect. The value of it goes down too. But if you think I'm making the wrong decision, then I would just like you to pull out a gold chart since 1900 and compare that to a fiat chart from 1900. And this will show you that I might just be onto something. But I think this is super obvious. It's defense that just happens to go up a lot, and it mainly goes up because fiat sucks so bad. But especially now it's going up even more because entire sovereign countries are figuring out what we have known for a very long time. If you're going to survive and prosper through these next few decades, you're not going to be able to do it by sitting on a bunch of cash reserves. Now, for this particular 25%, I am including gold mining stocks. This was debatable, but they're correlated enough to the price of gold. I figure this is an okay place to put them. Because I've been allocating money to gold periodically over the past 10 years, I haven't bought as many gold stocks as you would think I would, just because I didn't want to be over-allocated. So gold and the few gold stocks I have go here. The next 25% is going to be into Bitcoin. You guys have heard me gloss on and on about Bitcoin and what we always knew it was, and how now we always knew this moment was coming. There was going to come a time where people are going to finally catch on to what we've known for a very long time and start collecting too. And the problem with that is Bitcoin, unlike everything else, is finite. Like even land isn't finite anymore. They're like, oh, buy land. They're not making more of it. No, have you seen what they're doing in Dubai and in China? Like they're making land out of water. So all we had to do was really accept this as money. And once we finally did that, not only humanity agreed, but nations agreed, and banks agreed, and funds agreed. And I'm like, okay, it's officially on now. We have all officially agreed to this brand new form of money, which people are saying this is a once in a generation opportunity. It's far more than that. How many generations had something like this happen, where a brand new form of money came along? It was finite, and we all agreed on it. Like never. Well, maybe since gold. This is like a once in an eon opportunity. And so because I'm not super old, and because I will be hopefully earning money for a long time, I can take a risk like this with something that has the same properties as gold, but is riskier, but is also frickin' finite. Like, to be alive during this time and to be able to participate in this, I can't overstate this any more than I already have, contrarians. You're goddamn right I'm going 25% into nothing but Bitcoin. And if it drops a lot, who cares? I'll buy more. If it goes to zero, okay. It was 25% of my entire portfolio. I'm still young enough. I'll still be making enough money. I can cover that loss in an absolute apocalyptic scenario. But why on earth would I not participate in this, and participate in this bigly? I'm still an investor at the end of the day. I'm not going to over leverage into anything. But I don't think 25% into something like Bitcoin is even remotely reckless. So there's 50% right there. Let's move on to the next 50%. 25% of my portfolio is going to be in assets, like rich people have done forever. Rich people don't own a whole lot of cash at the end of the day. For some reason, rich people have always known what everybody else has not known, because they have had this knowledge passed down through generations in a lot of cases. And when the value of fiat currency goes down, which it always does, the value of assets automatically go up. And if you pick the right ones, they go up a lot. Now, if you're new, the way we do things here is we like to invest in things that are fairly rare, yet inevitable, because companies are going to really rely on them whether they want to or not. Instead of chasing individual companies, which have a lot higher variance, let's just invest in the things they're going to need. Now, unfortunately, those are typically companies as well. But when you have the strength of the underlying asset getting more expensive, which it almost always does over time, these companies are not only safer bets, they also have crazy asymmetric upside, which we love here. So this is going to be where all of my silver stocks are, in physical silver. I had to put it somewhere. It makes sense for it to go here, because it's where I also have all my other metals plays. Copper, uranium, soon to be lithium. This is where all of my energy plays sit. But as we have learned, or as you have learned throughout the progression of this podcast, this isn't the only type of asset that I invest in. We have talked about dividend earning stocks and funds on this show more as what is the majority of our portfolio going to look like after the big washout? But for now, some of these instruments are great, and I want them in my portfolio, especially as a bit of more of a defensive hedge. So I currently have a couple CEFs in my portfolio right now, and I have a bond fund that is currently paying me a nice dividend and will certainly go up in value if interest rates in the United States drop, which we all know they're almost certainly going to do. They're not going up. They're going to go down. It's just a matter of when. So this is one of the safest bets in my entire portfolio. I'm not talking about the bond funds that don't move and just pay you a dividend that way. I'm talking about your BND, your LQD. Go look into those and go check out the bond fund episode if you haven't already. The CEF episode and the bond fund episode are two of the most sneaky good episodes in this entire catalog I've put out to date. It is some of the easiest upside combined with some of the safest downside you're ever going to find. But yes, ever since I was broke, I wanted to always do what rich people did. And so no matter how much money you have or how broke you are, you should be doing this as well. The money you do have needs to be allocated properly instead of sitting there melting away. And this is how I have chosen to do this. And hopefully this template, I guess, can help you. But there's still 25% left to go. Can anybody guess what it is? It's actually kind of obvious. But maybe less so because I've been railing against it for the first 20 minutes of this show. It's cash. Of course. Cash sucks, but you still got to have it. For a couple reasons. One, it helps to be very liquid when the time comes when you need extra cash, just so you don't have to tap into your investments to pay for things. Now, I've always said it before, this is no problem. You're simply moving money from one place to another. So if you have to liquidate a bit of gold or a bit of Bitcoin or a bit of a stock, then so what? Just do it. You'll make more money, and if your money-making days aren't over, you'll make more, and you can reallocate that money back into the stock you just liquidated. But cash is not only really nice to have, we know that the only time cash goes up is when things go down in a recession. And we have still been as overdue for a recession than we have ever been in our entire history, by far. And you want to talk about the great wealth transfer. You want to talk about moving up percentile-wise? Being able to buy near a bottom because you're one of the few people in the world who actually have a bit of cash during these times, that's how it's done. And I have been wanting to participate in this ever since I did not get my chance back in 2020. And God damn it, I'm going to get my chance. My time will come when everything crashes, and my portfolio goes down too, but I'll still have cash reserves and cash ready to pounce when it's time to get things on the super cheap. And if that day ever comes, if this podcast is still in existence, we'll be talking about this a lot. But you will need cash to do that. Now, my cash is still a melting ice cube, but it melts a lot slower. Why? Because believe you me, my cash is not just sitting there idle like yours probably is. And I can even say this to my own audience because this is how few people actually take advantage of all of the yield-bearing options out there for you to take advantage of. How many of you are in SGOV earning 4.2% in an instrument that barely moves, that really doesn't move? There's talk out there about the bond market crashing, but that's on the long end. SGOV is all short-term bonds, which are doing just fine. I have a lot of my cash over there, and I am also taking advantage of all of the safer DeFi options out there in terms of converting my cash over to stablecoins because there's no reason not to. This isn't like before. Now you have tried and true options like Aave, like Uniswap, like Coinbase, who will all pay you just for having your cash right there. I only have a tiny amount of my cash sitting there not doing anything and melting away for no reason. Is it still losing value because inflation is just so crazy, especially the part of it you don't see? Yeah, but when it comes to my cash, I'm still able to outrun the tiger, at least better than most people are. And that makes my percentage go up, along with all of the other stuff I invest in. And it can be this way for you too. Do not be like the average normie who doesn't invest in anything, who works hard, gets raises, and then still wonders why they have all this cash, but it doesn't buy anything anymore. It doesn't have to be that way. And it's not that way for us, because we are by definition contrarian thinkers. But I still think a lot of you have that normie in you. For the love of God, get rid of it. Can you not see by now that this is not the place to be? And it never was. You must do things differently. You must take action, even if it seems a little bit crazy, because it's not crazy. You're just early.